Hey there, I'm Pete Townsend, and this is Money Never Sleeps. We look inside the minds of entrepreneurs and at the crossover of startups, enterprise, finance, technology, and life as we know it. We got a 2-for-1 special for you this week with Timo and Philipp Pieper, co-founders of Swarm, an RWA or real-world assets platform that brings unique digitization and trading solutions to the world of traditional and decentralized finance. Swarm is the first organization in the world to offer digitized U.S. Treasury bills and Apple stock via a compliant and decentralized platform. Day-to-day, Swarm work with real-world asset owners to tokenize collateral and build trading infrastructure in a compliant way. Issuers that need compliance guarantees to build secondary markets of tokenized securities, including fixed income products, choose to partner with Swarm. Swarm is a hybrid embracing the advantages of blockchain trading, flexibility, speed, and efficiency, and pairing it with the trust and asset range typically found in traditional exchanges. In short, Swarm aims to integrate TradFi with DeFi so that everything just becomes Fi. I welcome that day. Timo is a co-founder of Swarm and a fintech and blockchain investor. Selected investments and exits include Pex.com, a media rights management platform, Origin Inc., a private equity deals platform, and ad tech company Admeta. Leas also has experience as a fund manager and led the U.S. arm of Behringer Finance as an M&A advisor under SEC license. Philipp Pieper is a co-founder of Swarm as well as the Swarm Network, an open source project and DAO. Philipp also co-founded Proximic, acquired by Comscore, Loop Media, and Bitadel Crypto Trading. Philipp has been engaged in decentralized technologies and crypto asset trading since 2015. He is also a startup investor and mentor at Singularity University and StartX. He is a member of the AMA Blockchain Committee and Digital Currency Trade Association. This episode begins with a personal journey through the Swarm co-founders' educational and career experiences, highlighting Philipp's formative year in New England during the fall of the Berlin Wall and Timo's early foray into coding and investments. We then explore how these pivotal moments shaped their perspectives and eventually led them to crypto. Together, Timo and Philipp unpack Swarm's evolution from navigating the wild initial coin offering and security token offering waves of the mid-2010s to their current focus on bringing well-recognized assets like Tesla, Apple, and tokenized gold into the blockchain ecosystem. We reflect on the critical need for regulatory clarity, the future of blockchain in traditional finance, and the undeniable parallels to the early internet's disruptive path. Plus, we unveil the story behind the nod to 80s hip-hop with Swarm's iconic RWA baseball caps, inspired by none other than NWA. All right here on Money Never Sleeps. But listen, Philipp, I saw that you were at Deerfield Academy in Western Massachusetts at the beginning of your educational experience way back when. I was just an hour down Route 91 in Springfield at Springfield Central High School, coincidentally, while you were there. Do you think that 1 year you did in the U.S. influenced your educational journey and had an impact on the foundational steps of your career to get things started?
Yeah, it's fun. I mean, first of all, you know that environment pretty well, right? So it is the environment of, I don't know, Walt Whitman and Henry David Thoreau and transcendental experiences. And, you know, it's New England at its best, right? So you have to put yourself back into the shoes when I was a 16-year-old coming there and, you know, for the first time experiencing these things. It was actually exactly the year that Dead Poets Society had come out.
Wow.
Basically, I was living in that very movie that throughout that year. So a lot of things that changed for me. I mean, it was coming from Germany, you know, very conformist life there. And core of that movie and my life there was basically sort of how to be non-conform and, you know, sort of how to live authentically and sort of value independent thought and everything. I mean, that was the core of the education of a school like Deerfield. And then profoundly something else happened during that year, which was actually which I thought about last weekend because it was the 35th anniversary of the wall coming down. And I was there when the wall came down and I was sitting in the library there and basically someone came up and said, the wall came down. I said, you're nuts. I know it wasn't part of my concept that would ever happen. These two things actually changed a lot on my side, maybe even to the crypto values. It's basically sort of how to live boldly, how to question stuff, how to not be limited by convention and do what you think is right for that moment in which you do things. I tend to have forgotten that maybe 10 years into my professional experience, but certainly being in software, doing sort of entrepreneurship, living the crypto route, that certainly brought a lot of these elements back up, I would say.
Definitely. And do you want to say it, or am I going to say it? The tagline from Dead Poet Society.
Carpe diem?
Carpe diem and oh, Captain, my Captain.
Well, but carpe diem, I think in this case is actually more appropriate because Captain my Captain says, okay, well, there are these figures that you have in front of yourself. I had someone back then, my art teacher, which was very much that character of Robin Williams in the movie. But it's not about following someone, but those people pushing you to actually have your own independent thought. And that's like different than a captain, right? The captain is almost like you're following someone's guidance. But in this case, actually, they put you on the spot to do something by yourself.
Yeah, but I think it's also embedding the ideals of others, right? And that resonate with you. And I think that was one of the messages as well. So, but that is the notable scene where they do stand up on the desks.
Absolutely.
Say, oh, Captain, my Captain, right? And
there's a great movie, by the way, recently about Deerfield as well, called The Holdovers with Paul Giamatti. Very much the same kind of tenure, people that suddenly discover that they have their own personalities and young age. So it's really interesting, that environment, and, romantic as it gets, right? So Pete, you've been there. It's New England with all its beauty, but also just, it's an ecosystem of its own. It's like, it's so far from anything that a city represents.
It is. My parents now live in Northampton, and I, go back there once or twice a year with a family. But one of the trips, I think it was 2 years ago, was to Lenox and the whole community there in Western Mass, which is a very kind of art-focused community with a lot of wealth in that community. And some of it had been crypto wealth, that where one of the restaurateurs had funded himself through his gains in crypto. But unfortunately, a lot of that had been at FTX. Now, a couple years later, obviously, with the settlement, hopefully those will make their way back. But it was an interesting connection there. Before we get into your backstory a bit more, Philipp, Timo, any interesting educational experiences for you through the years that you thought were notable to your development here? Now, since we're on the educational and, way back when topic.
Yeah, I think I came at this from a very kind of analytical kind of perspective. So almost like the opposite of Philipp, what he just described in terms of like the creativity and the environment at Deerfield. But yeah, so I think I started coding really early on, like when I was 14, and then I started selling like commercial software when I was 16. So when I got to high school, the weird thing was that there was like 2 or 3 people that had done that from early age. And we knew obviously a lot more about computer science than the teachers. So this became like a theme already, at an early age where like, because they had just started teaching these topics in high school. And so like they were like years behind, right? So it became this like reverse dynamic in school where we would be like a small group of nerds that would basically be like 10 times more skillful in one particular area, which is very unusual. If you think about it, like at that stage, you would always think that the tutor would always be a lot more knowledgeable and like be way ahead, right? But so that this was like a very strange dynamic that I think was quite unique to computer science. And so that kind of continued through. And then I also had I had a really good math teacher in high school as well. So that kind of got me really motivated around that. And I won some competitions and stuff. So I was like very much on that side of things. And then, and after that, I went into university in computer science and all the usual stuff. But yeah, I kind of found that was a very odd experience just to be like much better than your teachers in something. And then they would just give you the highest grades because they had no idea what we were doing anyway. So it was just like a very kind of weird environment to grow up in. That's when I really took a liking to computer software and programming because it was such a unique thing and fit my personality really well as well at the time.
Definitely. It resonates to the current day with looking at some of the educational curriculum, whether that be at the high school level, at the university level, at the master's level. Crypto is just moving so fast and the technology around this is moving so fast. How can you possibly expect the educational system to keep up?
Yeah.
And it's not new. This has been, like you said, with your experience of knowing more than the teachers, that it's been a context for a long time. So interesting.
Well, and I think we live in an age of AI anyway, where probably every 5 years, we're going to have to redefine what work looks like, society looks like anyway. So when I encounter like my kids or young people that ask like, what should I do? And like, don't ask me. I mean, just stay in their toes, become curious and centered in yourself, because otherwise you're not going to succeed.
Yeah. Yeah. I heard a really interesting quote the other day, which was that find what you're curious about, become a learning machine.
Yeah.
And that's the best advice you can give your kids. Just as long as they're happy and they're curious and learning, that's what's important. Philipp, can you walk us through the rest of your backstory and how your experience in TradFi and digital media, which I thought was interesting, influenced your decision to partner with Timo on Swarm?
I have these two lives. One is actually sort of in the corporate world. It was at, amongst other things, at Deutsche Bank doing private equity, Allianz Group doing sort of portfolio management. But I was always attracted to technology. So I did a technology startup before that. And then actually out of that, I founded a company that became one of the biggest data vendors in online advertising, which we founded on search technology and basically sort of inched our way away from search into data, into massive data processing. We worked with Google and Yahoo and Amazon at the day. And then sort of we got acquired by a company called Comscore. But that was just data processing and it was SaaS, right? So and back sort of to your question previously about like interesting experiences that led to where we are today. Actually, then I moved houses within Palo Alto next to a crypto community house called the Love Nest. And we basically sort of had next door some creative founders that had people from the Ethereum Foundation, as well as from Dash, as well as from Gnosis and other places, just spend time there. And I just had to take my coffee walk next door and listen to some pretty interesting and batshit crazy stuff. So that in itself became sort of the nucleus of actually engaging within crypto and blockchain, because it also brought together a lot of the things that I had done in the past, like both finance. I had an access to the financial topics, but also SaaS and looking at software, building software. But also I had at the time looked at acquiring sort of, a company called BitTorrent, which you might have heard of, which also then a lot of decentralized technology, but also community stuff. It was a fun accumulation or a synthesis of all these different things that happened while Timo and I knew each other socially in Palo Alto. And when we met each other, we basically I said, you got to take a look at this stuff next door because it's interesting to say the least. And then we started to collaborate a little more on that, but Timo will tell a little more about how that came together.
So, I mean, I built two software businesses basically. And the first time I moved to the US was during the .com era. So it was quite interesting. I was working on a payments business and in 1999, and I basically met with like X.com, Elon's first company before they merged with PayPal. It was pretty interesting. And just kind of being in that environment, although I lived in Denver and Colorado, I was kind of spending a lot of time in Silicon Valley at the time. But so, yeah, that was kind of my first foray into proper Silicon Valley tech exposure. Then I got back to Europe to kind of work with a venture fund and then an M&A firm in London for 4 years. So I ran a venture fund that was connected to my tech university where I studied, and basically like the largest incubator fund in Sweden at the time. And so we brought like lean startup and that kind of movement to Sweden, inspired by Eric Ries and Steve Blank and those guys in Silicon Valley. And so that was a kind of an interesting, kind of very entrepreneurial / investment focused activity, obviously. And then I guess I'd done like 10 private investments before that. And then like the fund did 24 investments, and it's the usual kind of power law stuff, right? You have like 5 companies returning the whole fund. And so when the investment window was over for that fund, I moved to the Bay Area, and then we sold a couple of the companies from the fund. And then I pulled together a couple of family offices from Sweden and built like a new portfolio with tech investments. Again, only software companies, obviously only things that I thought that I understood to some degree. Yeah, so then when I moved to Palo Alto, I also set up an M&A boutique investment bank for a Scandinavian firm, which was under SEC license. So I had to go through the whole TradFi licensing process in the US with the exams and all that stuff. It's pretty interesting in some ways to understand like what that framework looks like. But also once I'd set up the firm, that's when, 2014, like you could really not avoid becoming like exposed to crypto one way or another. There was like, if you were just in the ecosystem for startups, then Tim Draper would be yapping about Bitcoin becoming $250K USD, and he bought the stuff from the US government, etc. Other people like Barry Silbert was in Palo Alto pitching his Bitcoin Trust 2014 as well, when he had just sold Second Markets. It was all around us, like all the time, but I wasn't at all focused on it at the time because I was working with these other things. So it was only really when Philipp and I sat down and Philipp showed me this community house next to his house, and I was like 3 blocks away from that in Palo Alto as well. That's when we kind of figured, what is actually like a good founder market fit here for us? Like if we were to build something, what could that be and what would that look like? And then so I came back to my TradFi VC PE understanding of like, well, actually liquidity of funds and private investments is a real big issue. And I think blockchain can solve a lot of that. That was like my view into that space. And then, of course, Philipp had similar backgrounds as an investor as well in tech and so forth. I think we kind of somehow, I don't know, it wasn't like articulated at the time, but I think we just kind of emerged into that whole like, oh, let's just tokenize illiquid assets and bring them on chain to solve some of the issues around that. And then that's when Swarm also became a known concept to us, if you will, because there was like an earlier iteration of Swarm before we jumped on it. Yeah, it was all kind of happening around that time, 2016. That's when we started to really start thinking deep about these things.
And when Philipp brought you into this and said, like you said, you had been aware of it, right? But you weren't spending much time looking at it. But when Philipp said, hey, you should look at this, did you feel the need to kick the technical tires?
It was actually quite a hurdle to get into both the culture as well as the technology, because like it was quite different from everything else that I had done before. Like if you run a fund and you kind of make investment, most of the time it's like normal companies, there's a cap table, there's founders, and then you make the investment if you think it makes sense, et cetera, et cetera. This was very different. This is like, oh, there is no company. There's only a protocol. I'm like, what do you mean? Well, there's kind of a foundation. Oh, what does that do? Well, it kind of maybe governs or not. And it was just like a totally different mind flip on how to think about these things. That was a huge thing to wrap your head around, I would say. I was listening to like a couple of the guys that were already deep in it, like Joey Krug at Pantera and those people. And it was like, well, if the protocol project, if the decentralized organization has a CEO, it's not very decentralized, is it? So it's like, so he was making some of these points very clear, like, look, this is a different structure and this is built in a different way. And obviously coming from the software background, I mean, obviously I'd been dealing with open source for many years, but it's like, this had like a totally different component to it and organization. So I thought it was very cool, but also extremely interesting because it was just so different.
Yeah, absolutely. And interesting that this is the time that the two of you jumped into this fee first was around the same time that I did as well. And it was 2014, figuring out Bitcoin and blockchain in general, reading the Ethereum white paper when that came out, in rapid succession to understanding Bitcoin and blockchain. And then finally seeing it start to unfold a little bit in TradFi and starting to track the projects that different TradFi players were perhaps looking at, or they were contributing some talent to some different consortiums that were trying to get off the ground around this. And then I left TradFi in 2016 and it was a very almost exploratory time out there to see what might work and to see all the technology was definitely very nascent still at that point. But when you guys got together to do this in 2016, 2017, to really get Swarm off the ground, were there some early critical learning points that you view as instrumental to how that path started to unfold and the things that you kind of baked into the beginning of this that were really important to where you got to today?
So maybe let me start by just saying that jumping in is not the right term. I think it was more, it took maybe 16, 17, 18 months to slide in. It was like, okay, there's something interesting going on there. We sort of were exposed to the different people there. You really had to look beyond some of the people that were hanging out in that environment. And I'm not saying directly next door, but generally in the ecosystem. And with the mindset of coming from finance and software, it was sometimes hard to imagine that could lead to an infrastructure that could serve a traditional landscape of some kind, right? I think the sliding in, it took time to formulate whatever we thought was right, and then also convince ourselves that it was actually worthwhile to spend more and more time and focus there. So it wasn't like the moment when we discovered and had the revelation to actually engage. It was more like a process. Secondly, I think we did from the very beginning actually sort of come in with a slightly different mindset than some of the others that were in this space already, or were just then suddenly pushing the end of 2016 and 2017's ICO era. We didn't want to do things beyond the book and outside of regulation because it meant a huge deal of risk. And I think maybe some of the learnings have been along the way. Some of the people got away with very huge commercial success by doing or asking for forgiveness rather than permission maybe even not even asking for forgiveness because they didn't get even put in the spot to have to argue that. I can just say for myself, and probably Timo would concur with that, is like, I sleep way better by having done it the way that we did it. Because along the way, and that's not just to the last 4 years with American regulation, but before even, like we both made our way back to Europe 2018-19, and it became evident already during that time that America would need a huge undertaking to actually become an environment that you could do things out of. It was actually the learning there was it does take a longer period of time for a sophisticated market like the US to actually get to use these infrastructures. And not just from a cryptocurrency perspective, but a lot of the potential is beyond cryptocurrency, beyond Bitcoin, as crazy as people might assume that, in actually really becoming that infrastructure where financial actors get together and have an infrastructure where they can actually transact in a different fashion than in the financial markets, right? I mean, now we're talking about 10 years in almost, and it might take another 5 to 10 years before that's really a reality that it replaces much of the centralized systems, right? So maybe that time expectation was a little off. I think the convergence has happened, but I think the learnings have been that, as much as it hurt at the time to actually sometimes be held back by that kind of attitude, it actually was something that over time proved to be the right choice for us.
Yeah, definitely. And yeah, I do like how you expressed it as sliding in, right? And knowing what you're getting yourselves into and being mindful of what's going on around you out there in the market. And the whole reason that I got into this space to begin with is because when I did look at the Bitcoin white paper, I thought, well, if this is what can be done for internet money, then imagine what it could do for the traditional financial markets. Yeah. Now, I started on a journey to pursue through investing this outcome of there is a long arc of the financial markets, but it bends towards tokenization, right? That was my view of the world and still is. And where I started was from attacking it from a TradFi perspective. After a couple of years of seeing where things were, I said, you know what? The crypto economy still has a long way to go to unfold, to get to a point of maturity. And we need that arc to evolve. We need that arc to continue. And at some point, the TradFi arc will cross back over into that, and that we will see tokenized financial markets. And I think we're at a point now where we've seen tons of activity around this that has been interesting. And you guys have been obviously at the epicenter of this. Can you tell me what Swarm is today and how it works, and kind of as a result of the journey that you've been on since 2017, 2016?
Yeah, I think, one of the big takeaways was that when we started tokenizing assets in 2017, 18, then there's a lot of complexity around just even structuring things, right? Like, how do you do this legally? What's the offering? Who's able to buy it, et cetera. And I think a lot of those things were initial hurdles, both actually on the supply side in terms of structuring and tokenization and the regulation around that, but also on the investor side was two camps almost. One camp was OG crypto. They didn't care about those assets. End of story. They just did not. And the other side was nobody had wallets. On a traditional investor side, nobody had wallets. So that was massive hurdles, obviously. And then, of course, the more obscure the underlying asset that you're trying to tokenize, the less understanding there is from the investor side, which means you're trying to offer something that's novel on a novel infrastructure. It just becomes too much new on new. So it's very difficult to get traction. The way that we're structured today is that we're basically issuing RWAs that are very well understood by the market. So these are things like tokenized Tesla, Apple, MicroStrategy, NVIDIA, and so forth. And then expanding that recently into gold as well. So it's kind of the first foray into commodities. So I think that's one way of saying, hey, here's a way to interact with these assets, which provides some benefits that are not available or very difficult to achieve in TradFi markets. So that's why we're putting them on chain. And then, so on top of that, if once you put them on chain, then it's so now what? And then you need to provide, unless there are existing applications that can provide things like liquidity and lending, well, then you kind of need to prime the pump and provide some of those as well. So therefore, we built a secondary liquidity protocol called DOTC, which allows people to do basically peer-to-peer swaps of these assets. So that's the core of what we do today.
So that's one part of the business is what Timo described, the principle where we come up with these well understood assets. We basically issue with them. We sort of make the market in some ways too. On the other side, that entire stack, we actually are starting to give to other people that want to do that by themselves for whatever asset, right? That ranges from people that have a fund to carbon certificates to all sorts of assets that basically that's a SaaS business, right? We just give them tools. We're a technology provider. We're not a principal in that entire equation.
You've just answered my big question, guys, which is this more than just an acronym change, right? Because the STO, the security token offering, and I was hanging around that scene back in 2018, 2019, and now RWA, real world assets, right? And that I actually helped a startup here in Ireland that was trying to get a research project done with one of the local business schools, and where they did a deep dive into the security token offerings that had happened. And I think it was just in 2018, and there might have been 65 of them. But Timo, you made a very good point. The majority of them were assets that if you were to put them into TradFi packaging, people wouldn't recognize them either because they're very esoteric assets. So it sounds like the change, like you said, has been between STO and RWA, that with real world assets and the RWA acronym now that's on top of this, that it is assets that people recognize, gold, treasuries, and that it is a lot easier to package these things up in a way that have some distribution because they are assets that people recognize. Is that the long and short of it?
You could almost say that ICOs were STOs, right? I mean, a lot of people don't want to say it, but in the end, it was basically that a lot of startups that came to the space just basically said, okay, here's the magic internet money, pixie dust, and I'm just going to issue a coin without respecting regulation, which is fine, by the way. And a lot of people succeeded with doing that, right? But I think the misunderstanding was that if you think about RWAs today, that is not just giving access to intransparent assets with a startup being behind it, but it's actually sort of more coming at it from the top down. You coming from high quality assets, well understood assets, maybe inching your way down into less liquid assets. So for example, like private equity funds, or maybe something that already is, well understood and formulated from a perspective, but actually has not a liquid market and has some kind of special situation because it's not fully public, right? But there's a long way between that and actually going down into the smaller assets that are intransparent and basically unproven.
Yeah, and I think one of the big failures of the STOs in 2017-18 was that there was like a opportunistic stream of adverse selection assets being tokenized. It's just like basically things that couldn't be funded anywhere else were showing up into the STO market, trying to get capital allocated for something that didn't make sense from the get-go. So it's just like, it was never going to happen regardless of blockchain or no blockchain.
It's amazing to think of everything that came through this space way back when. Speaking of the acronym, RWA, and that is the reason why we're here today and chatting. And a big shout out to Katie Evans. I met Katie at Zebu Live in London last month, Web3 conference. And Kenny from Millicent, one of my portfolio companies, he was wearing a hat that said RWA on it, but the script of the RWA or the font of the RWA was a very recognizable, and I'm holding the hat up to all our listeners out there, to Philipp and Timo right now, because they're very well aware of it, that it is the same font used for NWA, which is one of my favorite rap groups from the 1980s and 1990s that spawned the careers of Dr. Dre, Ice Cube, and the unfortunate Eazy-E. There was one other, I think it was Yella. And so I saw Kenny wearing this hat. I'm like, dude, where did you get that? And he pointed over to Katie. And then Timo kind of appeared in the background there wearing the same hat. And I'm like, I need one of those. Kenny's like, go talk to Katie. I tried to get into a conversation with her. I saw her talking to somebody else. I waited my turn politely. And then I said, Katie, I am a rap child from the 1980s. Hip hop, loved it. I also have a podcast. Can we do some sort of trade here? And she just smiled. She's like, I know what you want. She grabbed me a hat, the last hat, and she gave it to me. And I was wearing it the rest of the time that night and then at the conference the next day. So, and Timo, that's when you and I got to briefly meet as well.
I'm from the same kind of music base, if you will. And so one of my educational journeys was with my kids to Los Angeles when we moved to the US. We were like listening to Straight Outta Compton driving into LA, because that's what you do when you're trying to get your kids to understand the environment that they're in, right? And yeah, with some unfortunate lyrics, but so be it.
We're fans of Katie, and Katie's brilliant in that sense. She runs marketing and biz dev for us. But I think it's fair to say that the NWA hat is sort of a Trojan horse to get the rebels within the older generation within fintech excited, that are basically down with, with rap culture, but are still like coming from sort of the somewhat establishment over crossing over to this side of the spectrum into crypto. So it's actually a pretty picture perfect way to look at it. And we get a lot of comments and fist bumps at conferences wearing those hats.
Oh, totally. And I've got like Boys in the Hood. Like I've watched that movie 100 times. I've actually quoted that movie in talking to my son, my 12-year-old son, when Furious has the chat with Trey. And I'm just dying for my son to eventually watch that movie and for him to think back with terror as I was explaining that to him. I actually skipped school in high school to go see Boys in the Hood at the movie theater, at the cinema. And I was interviewed on the way out because there was a lot of controversy around that movie when it was released and the messages that it was positioning. And I was like, wait a second. I can't be caught on camera when I'm skipping school here to see the movie and giving my opinion on it. So anyway.
So it's good for your son to know that that his dad is shooting guns sideways.
Exactly. Yeah. Exactly. Looking at where we are now, okay, this is a very, I don't know, we could talk at a number of moments in the history of the financial markets being seminal moments, but I think we're at a very unique one with what just happened with the US elections, with what had been on the cusp with the Fair Shake PAC, with the change of congressional old hats really into looking at more of, hey, who's supporting crypto and the success that Fair Shake has had with that, whether it be a political or a more objective mandate. There's so many things that could go in different directions here right now. I'm going to quote this, which I think was a very kind of big part of where we are right now in the history of this. And this was the State of Crypto report from Coinbase Ventures in June. And it said that America's top public companies are busier on-chain than ever. On-chain projects announced by Fortune 100 companies have increased 39% year over year and hit a record high in Q1 2024. A survey of Fortune 500 execs finds that 56% say their companies are working on on-chain projects, from the biggest legacy brands to small business, stablecoins to be tokenized, T-bills. Trusted names and products in finance are embracing blockchain technology and crypto, driving innovation and providing on-ramps for widespread adoption. The increased activity underscores the urgency for clear rules for crypto that help keep crypto developers and other talent in the US. This kind of summed it up nicely for me, and I think seeing the recent $1 billion bridge acquisition by Stripe is only going to accelerate the pace of on-chain growth. You guys are right there, like I said, at the epicenter of this. As you look at how you want to develop your coverage and your growth and your scaling and pursuit of new asset classes and geographies, how do you think that will unfold? Geographically, by type of investor? How do you think this RWA story will play out as part of the growth of on-chain securities and the longer-term tokenization of financial markets? I know it's a big question, but kind of looking at where we got to and now where we can go to from here with this baseline of where the world is at this point in November 2024, where do you think it can go from here?
I think it's fair, first of all, to say that a lot of people don't recognize that RWAs is a big category today, because the most successful RWA is actually stablecoin, if you want to call it that way, right?
It is.
And if you look at the biggest trading pairs down in Brazil is actually USDT to RAI, and it's not Bitcoin to RAI, right? And it already, like, it speaks to the fact that there's just a lot of use cases that are maybe not obvious to the eye in trade finance or just in the real world where these stablecoins are being used, because they're more convenient. They're easier to transact. You don't need a bank and the middlemen associated with it, which obviously stack up when you go from Brazil to America or from Brazil to Europe. And I think that efficiency is just it's gonna lead to that software eating that category very quickly. The more we actually have these tools that are being simplified, made reliable. So starting from what Timo was saying, from wallet infrastructure just being hidden away and tucked away and simplified and abstracted away, to safely usable stable coins, which Europe has done a great deal in the MiCA regulation that is coming early next year. But also America is already, I think there's a bunch of proposals actually on stablecoin regulation that are coming, and will now maybe a little revised based on sort of the new administration coming in. What it does is actually it levels the playing field, makes it more reliable for people to engage. It's no longer like this dark corner of a software or a sort of crypto ecosystem that a lot of end consumers just go into like to gamble, which is sort of has been the perception for the last 5 to 10 years possibly. But now it's becoming reliable, it's becoming secure, it's becoming understood, right? And I think that is a very important thing because we've been in this European ecosystem quite for the better part of the last 5 years. And America has been sort of a leading force. And the Europeans have been looking sort of at America saying, okay, what is America going to do? It's almost like this wait and see. It's like, okay, now we have to come up with this very tight regulation to not like trip over our own feet. But now that America might actually step ahead, a lot of things will actually follow. So we still have work to do, I think, entirely in the industry to make that really a good regulation, a good level playing field, because you look at the Bank of International Settlement with all the risk capital that they're proposing to actually put against crypto assets, that can be a blocker pretty soon. But I think the ecosystem has to evolve. So when we think about going forward, well, our immediate answer was what we gave earlier, is basically right now we're building value assets that are available to the crypto native crowd. So MicroStrategy and Coinbase being sort of stocks that are not available in crypto generally, but now they can actually be bought alongside all the other crypto assets, or gold, making that in a tad more reliable fashion that it's regulatory compliant, meanwhile sort of as trustless as possible, and working with big partners like Brinks on that, et cetera, right? But that will certainly take a little bit of time, that these other models that we're talking about, where software like ours gets used in actually sort of being exposed to other investors that have nothing to do with crypto, giving them simple, almost like Web 2 kind of experiences, but where they can do things that are 10 times more efficient or 10 times easier than actually in the traditional world. That will win over the entire market. So I think we as an industry, not just we as Swarm, but we as an industry still have like a couple of years, if not 5 to 10 years to go to really make that a full-blown reality. But as you say, this is a seminal moment because a lot of like the building blocks and the obstacles put in the way have been now gotten out of the way to make this reality a reality much more than when we started in 2017, where a lot of things were ambiguous at best.
On the geographical aspects of that, I think while Europe now has kind of some level of clarity, and I think we're definitely going to explore and leverage that, call it the regulatory arbitrage, because we're in Europe, we understand the market well, and we know the regulatory environment well. So I think we can do things here that kind of almost like are in advance of what we obviously could do in the US. So I think we're definitely doing that. So I think and we're not the only ones, right? So I think to some degree, some of the things in Europe will develop like first because there's regulatory clarity. But I think the hangover in the US of the kind of the Gensler Warren regime, I think the question is like, how quickly will that disappear? And like, how fast will the US turn around now next year? Because we know that when it turns, it moves with massive momentum, right? And force. And I think that's difficult to assess right now. Like, how far can we get in the European kind of context before we actually have to also probably shift focus, or at least spend more time back in the US again? Because now there's like a way to build in the US again, which wasn't available before. And we just know the power of that engine when it cranks up and gets going. It's very powerful, and the ecosystem moves so fast, right? Especially in the Bay Area. So I think like these things really matter over the next 5 to 10 years. So you can argue that there's like this little advantage right now in Europe, but I think that's going to be rapidly overtaken by the US in the next 5 years.
Yeah, I can feel that. And it's a very weird shoe on the other foot moment in terms of the big risk-taking America versus the more conservative Europe, and seeing Europe being ahead on the regulatory front around crypto. But there's tons of momentum right now in the US that will hopefully unlock, as the guys from A16Z say, let's keep this development of this technology in the US. Let's not send it offshore.
Kind of interesting. Michael Saylor was on camera 2 days ago, and he was saying, well, you should be able to buy like Apple stock with your phone, and I should be able to send you, Pete, an Apple stock from phone to phone. And he's right. Why actually have obstacles in the way if we have digital infrastructure that can actually make that all happen, right? We see some early innings of that like we are doing right now. But I think that's going to be the future. We're going to actually unlock a lot of use cases that suddenly can work differently than in this caged environment of banking applications. And it very much reminds me sort of the comparison of like when mobile phone providers actually started to think about the internet, they started to think about walled gardens and how they can control this stuff. But we know that the reality today with the iPhone sort of blew up this whole space, and it's all about services and microservices being usable and consumable. And it's more the appification of stuff that became a reality rather than actually someone actually have a Wells Fargo app.
Oh, yeah. I read something very interesting the other day. I forgot who said it. And, were we ever actually meant to use Web3? Shouldn't it just be AI agents that are using it?
Isn't that very similar to the internet, right? Like when you were like configuring your PPP protocols on dial-up, it was like, this is probably not the way it's supposed to work. And then you get broadband, and then all of a sudden, like the internet technology just goes away, right? And then you kind of end up interacting with these other layers. It's the same thing here. Like we don't necessarily need to be aware of this stuff. We just need to tap into the benefits of blockchain. I mean, that's all there's to it. It's very similar to the internet. Like there's almost like no difference because you had the combination, the dynamic of regulated industries that were being challenged, et cetera, et cetera. So it's like almost the same thing in some ways, with one exception, which is Bitcoin. I think Bitcoin has completely its own path and role going forward. And it's just like extremely exciting as well.
It does. I kind of carved that out of a lot of different discussions and just listen, there's Bitcoin and then there's everything else. And then the Ethereum narrative has changed a bit, it seems, in the last couple of years. And there are folks out there who are just saying, listen, there will be Bitcoin, there'll be Ethereum, there'll be Solana and a few others, and that's it. And that's how this will evolve. But long way to go. Thinking back just to the 2016, 2017 era, tons of crazy things happened out there. What do you think was the single craziest from each one of your perspectives that you saw happen?
I think BitConnect gets an honorable mention by me. Like it's funny because we had two guys on the team that had worked with BitConnect. I don't want to say BitFinex, but BitConnect, and they were drinking the Kool-Aid of the messaging back then. They were saying, "Oh, this is going to free up, like it's going to universal basic income, blah blah blah. It's going to topple over the pyramid and all that kind of stuff." But in the end, I read this other quote that said, "If you don't understand the yield, you are the yield." And in this case, actually, that proved to be true faster than anywhere else. I mean, if you promise like 1% a day in terms of the yield, I mean, where's that coming from, right? But that moment when that guy, what is his name, Carlos Mutos or something, went on stage and said BitConnect, and I think everyone sort of in the industry laughed hilariously about it, but knew this was a step too far. And that was a big volume. And we saw a bunch of those kind of models out there, right? Where yields were promised that were unsustainable, like from, I think, people like Plexcoin to even Celsius, that basically were promising all these things and were pretending to actually just hold your stuff in custody, but actually didn't, right? So that's the classic where people get excited about those returns, and you basically get that number on the screen that goes up and it draws a lot of people in. But yeah, I mean, this is outside of all the obscure stuff where I think there's, from Jesus Coin to, I think, useless Ethereum token or something it was called, but basically had no purpose whatsoever. Yeah, I mean, that was just creativity at its best.
Oh, yeah. I've seen tons. Timo, what about you?
Yeah, I think that it was such a weird, like, amalgamation of people. Like, if you look at that, let's call it like, if we want to call the crypto industry an industry already in 2017, it was such a weird mix. Like you had these like artists, you had these like, obviously a bunch of tech entrepreneurs, you had a bunch of outcasts, you had investors, and it all came together in some kind of, it was very kind of chaotic, right? And then you have like the rapid value increase in terms of, because let's face it, I mean, the Bitcoin people, I think were by and large, like almost like its own community. Whereas like most of the people that were building on Ethereum, when ETH went from like $7 in November 2016 or something to 1,400 in like December the year after or something, it's like it's free money, right? So like people perceived it as free money and then started throwing around free money at various things, including investments, including service providers. Like some of the rates that people were charging for very basic, obviously under delivering on almost everything services were just like totally exuberant because it was paid in ETH. And like, I was like, oh yeah, sure. Like, no problem. People just chucked ETH at each other, whether it was an investment or whether it was a service provider or a listing fee or whatever. It was just like the craziest environment, right? So I think that exuberance is to me is what kind of sticks with me. And then with that exuberance comes like all this stupidity that like Philipp was describing some of it. And that was just a sign of times, right? It's even more extreme than the 1999.com like stupidity, which actually, by the way, endorsed by bulge bracket banks. Let's not forget, right? A lot of those IPOs. So, but this time it was like a bunch of weirdos and amateurs mixed with professional investors and artists and what have you in making all of this happen. And it just became a really interesting mix in one way. But then, and I think to some degree, this whole like emergence of RWAs and the integration of TradFi with DeFi and blockchain in general, the decentralized kind of philosophies, I think it's obviously inevitable on one hand, but also like, let's not make it grow up so quickly that the blockchain benefits disappear, because to me, that's the biggest threat right now is all these wise people show up and it's like, oh no, we need to do it this way. And then it's, well, okay. And you don't actually question why are we doing certain things. Is again, coming back to like first principle thinking is, okay, so when you do this transaction, what are the risks exactly? Not just overlaying old risk measures on top of blockchain, because a lot of the things are not needed anymore because the transactions are transparent and they're there to a large degree. And to some degree, you can get rid of some of the TradFi overhang when you build things on chain. So it's just like, and I think the most obvious example is intermediaries. There's just a ton of intermediaries that are not needed anymore. Let's just get rid of them. It's like very similar to internet in that sense. Let's just shave off the stuff that's not needed from the market and then build it from that, basically from that ground up, based on those principles, rather than just overlaying TradFi on blockchain, which I think is a path to disaster.
Totally. I worked this out back in 2018, 2019 with the guys that I was working with, where we looked at the STO landscape back then and said, investing through the current intermediary TradFi framework means that for every $100 that you invest, you unknowingly start at 91 and you need to work your way back up. If you had been doing this through the crypto framework and infrastructure, you'd be starting at 98 or 99 to get back up over 100 with your investment. So, but like you said, we do have a long way to go. Guys, I'm going to wrap this where I wrap every episode that we do of Money Never Sleeps, which is, what is one thing that people would not expect to know about you, each of you?
I think like a little bit of the obscure trivia is that when I took my exam from the tech university where I studied, I went for a last course, which was called technology history. So I went up to the examiner and the professor, and he was like, "Oh, Lies, did you know that your dad and I built the fastest analog calculation machine in the 60s? We had the world record for 3 weeks before Stanford beat us." And I was like, "No, that's interesting." But that kind of explained why my dad was always like trying to make me understand and do math. So basically I was like drilled early on that. And then all these kind of analog calculator things that early on. And then so I ended up obviously winning some math competitions in school and stuff like that.
That's fascinating that you've had it in your blood this whole time.
That's it.
Awesome. Philipp, what about you?
Oh, God. Yeah. So when I sold my company back in Silicon Valley, obviously you get into sort of identity crisis because you've just let your baby go, 7 years of building a company. And then I opened the funnel really wide. And I amongst other things, I started to engage with an activist group that was actually flying USB sticks of Wikipedia into North Korea in balloons.
Wow.
Yeah, that got shut down pretty quickly. But I think a couple of copies of Wikipedia actually ended up in North Korea because of us.
Wow. The big effort to educate is, not always met with open arms, isn't it?
No, for sure.
Awesome.
Well, I can understand that being shut down, but I think it was also something where knowledge actually clearly sort of wins. And look at it back then, it was the time of WikiLeaks and other things happening as well. I think over time, we got to somehow, and maybe crypto is some expression of that, but we somehow got to return to some of that activism again, because if we just obey, I think people are just going to sort of end up not knowing a lot of stuff.
Absolutely. Knowledge does win. And speaking of that, what is the best way for people to learn more about Swarm?
Well, the easiest is go to swarm.com, but also like on and Twitter and Telegram is all linked up there. But we personally, I'm at Philipp Pieper on X or Twitter. on LinkedIn, pretty easily found. Timo,
Yeah,
the same applies to you, right?
Timo is at Twitter and same on LinkedIn. Very easy to find us.
Fantastic. Yeah. And we'll link all of that in the show notes so people can reach out to you. So thank you, gentlemen, Philipp, Timo. This has been a lightning chat and one that I'm very excited to have done with you guys. So
it was great. Thanks for having us.
Pete, thank you.
That does it for this week, folks. Thanks to Philipp and Timo for opening up their minds to help us figure out why they do what they do. Check out the show notes on moneyneversleeps.ie for all the relevant links to learn more about Swarm and the Swarm Network. If you like what you heard, please leave us a rating and a review on Apple Podcasts or Spotify as it helps others to find the show. Also, thanks to Conan Brophy from Create Sound for mixing and editing this episode. Conan is an excellent media man to get in touch with when you're thinking about launching your own podcast. As for me, I'm an early-stage startup investor focused on where fintech meets crypto and crypto meets Web3, and I lead the Techstars Web3 Accelerator. There are plenty of links in the show notes on moneyneversleeps.ie on how to get in touch, so don't hesitate to reach out. Finally, till next time, thanks for listening. See ya!
Money never sleeps, pal.